So, friends, good morning and welcome to you all. Let me talk to you now about the accounting. So, in general, and with particular reference to what is being followed in the departments of the Government of India, the autonomous bodies, and the public sector undertakings. And before going deep into the subject, we have to have some basic knowledge about the role and responsibilities of a drawing and dispersing officer in a government office. Because DDO is the key person who is responsible for collecting all data pertaining to the accounts, for compilation of accounts, preparation of the accounts, filing of the returns, and also providing of all accounts data to the PAOs, the other higher authorities, headquarters, and to the Ministry of Finance, etc., etc. So the basic responsibility of a DDO is that of an accounts officer, and heads of the department or the directors of the departments. They have to therefore entrust this responsibility to a person with a sound finance knowledge so that the work goes on smooth and or otherwise. I mean, they will definitely land up in so many problems, audit objections, and all. See, a drawing and dispatching officer is a must or it is mandatory under the provisions of Rule 14 of the Delegation of Financial Powers Rules 1972. So every office should have a drawing and dispersing officer, and if it has several branches, etc., it can also have more number of TTOs than the PAO or the paid accounts officer and PPAOs, the principal paid accounts officers, and so on, depending on the circumstances. So the basic responsibility of a DDO is the drawal of grants, drawal of budget of the organization from different sources, and also acknowledging the receipts and the safe custody of the valuables and the cash. And it's also the very important duty of the drawing and dispersing officer to pass the bills after observing the rules. Again, remittances, preparation of accounts, filing of returns, I mean, pertaining to the income tax, GST, customs duty, excise duty, etc., etc. Maintenance of the broadsheets, ledgers, files, accounts. Similarly, the registers, furnishing of the MIS information to the management, enabling them to take a decision, and so on. Now, let us see the structure of the accounts at the central government level. So the government of India mainly maintains the accounts under three main headings, namely the Consolidated Fund of India, Contingency Fund of India, and the public account. Of course, under these headings, again, the information is compiled, maintained under different major heads, minor heads, detailed heads, the activity headwise, and so on. So the Consolidated Fund of India, it accounts for all receipts and expenditure of the Government of India, both capital and revenue accounts, also the public debt, loans and advances, etc., etc. And the contingency fund, whereas the contingency fund, it is available, it's a small amount set aside to meet any eventuality, and it is available to meet the unforeseen expenditure, which is not provided in the budget. And this expenditure, of course, is to be transferred to the Consolidated Fund of India, and it should be recouped before the close of the year after taking the approval of the Parliament. And number three, the government accounts, they are also maintained under the public account. So this public account means where Government of India is only the custodian of the monies and not the owner, and the money belongs to the public. It may be the Public Provident Fund, Provident GPF, CPF, EPF, the post office deposits, and similarly the savings deposits, etc., etc., where the public are the owners. So the debt, deposits, advances, remittances, and even the suspense accounts. So these are all maintained under the public account. And of course, this money can also be under emergent conditions with the approval of the parliament. It can be utilized for the general use or against certain projects under social schemes by the government with the special approval. And of course, immediately it is to be recouped. So now let us see what are the accounting principles and concepts in general. See, accounting is the art of collecting, recording, classifying, and summarizing all financial transactions of an organization in a standard language so that the complete state of affairs of an organization it can be understood by going through these accounts. So I said it should be in a standard language. So accounting standards. See, there is or formulated by the Accounting Standards Board with the association of the Institute of Chartered Accountants and other governmental authorities. So they formulate the accounting standards which establish the rules relating to the recognition, measurement, and disclosures of the financial transactions in the accounts. And they direct how each financial transaction needs to be treated in the accounts, ensuring that the statements speak the same language across the country, across all the financial institutions, and ensure accounting standards. They also ensure that the statements are comparable, they are true, fair, and transparent. So, sound capital market system it requires high quality accounting standards. Accounting standards they reduce uncertainty and they increase the efficiency and they also increase the investors' confidence by providing comparable information. So the accounts are compiled again in different forums, not in a single forum, in different forums for different purposes. Accounting statements are required by various parties, namely the proprietors, to read the well being of the firm. It's required by the creditors to know the solvency of the firm. And the investors, they want the accounts to know the earning capacity of the firm. Accounting procedure has been evolved on certain course principles, concepts, conventions, doctrines, assumptions, actions, axioms, and the postulates. So basically, accounts should provide the following information, namely the types and amount of earning under different headings, or not all earnings put together, but earnings under different headings. Similarly, the expenses under different headings explaining the nature of expense, the loss, similarly the causes of increase or decrease of the capital, nature of the value of assets and liabilities, and the customers who owe to the business and what is the amount they owe. Similarly, the suppliers to whom the organization or the business or the company or the department owes and what is the amount and the other factors that are required for filing of various returns like income tax, GST, excise duty, etc., etc. And there is some basic difference between the bookkeeping and accounting. Let us know that. Coming to the scope of bookkeeping is just identifying, measuring, recording, and classifying the financial information. Whereas, in addition to this, the scope of accounting includes summarizing, analyzing, interpreting, and communicating the information to the authorities concerned. And bookkeeping is a primary stage, whereas accounting is considered as a secondary stage. The objective of bookkeeping is just to maintain the systematic records, whereas objective of accounting it is to ascertain the net results of operation and communicate that to the owners or the heads of the department and the knowledge required for bookkeeping is, not that high, whereas for accounting, a higher level of knowledge, a specialized knowledge is required. And analytical skill is not required for a bookkeeper, whereas analytical knowledge is also required for an accountant. And bookkeeping is a routine job, whereas accounting is an analytical job. And designing is not covered in bookkeeping, whereas designing of the accounting or the MIS statements, etc., is also, included or covered in the accounting. And a bookkeeper, he does not supervise the work of an accountant, whereas an accountant supervises the work of a bookkeeper. And there are different branches of accounting also, like financial accounting, costing accounting, management accounting, and so on. So financial accounting, just as I explained, the purpose is to keep the systematic records to ascertain financial performance, financial position, and to communicate to the concerned external users. So this is what we said. So that is, collecting the information, recording, classifying, summarizing, analyzing, interpreting, and communicating. Whereas costing accounting, the purpose is to ascertain the cost of any, the project or any item of expenditure that you take up, and to control and communicate the information for the decision making. Whereas the management accounting, it is concerned with designing the accounting and communication of the information. So in what formats it is to be compiled, communicated, so that it becomes easily understandable by the managers to take the decisions immediately. So in such a way that management can take decisions on the capital expenditure required, the capital structure that is required, decision about the dividend policy, etc., etc. And of course, heads of account play a very important role in your accounting information. They should be detailed heads of account. You should capture, all transactions, the nature wise. So whether it is a liability or income or expenditure or an asset, whether it is a deferred revenue or advances, etc., etc. So how our accounts, heads of account, are to be designed, we will see in part two. And let me close part one at this stage, friends. So thank you very much. Thank you very much.